So what is InvestAUS? It's the most affordable way to invest. It's a DIY robo-advisor that's always trying to find the best risk-adjusted portfolio, and you can follow it as closely as you'd like. Basically, it's an algorithm that follows textbook investing rules so your money's safe. It's doing all the math that you might not be aware of to make sure you have the best risk-adjusted returns. So who am I? The founder? I'm Nick Tustin. I'm the app developer and was a financial advisor. I worked at many billion-dollar institutions in Canada such as Sun Life, TD, BMO, Edward Jones, Canada Life, and essentially I was always asking for better tools and ended up making them myself. Basically, everything I'm showing you is a better version of what financial advisors have been using for decades. Now it's just putting the power in your pocket. Essentially, now you can be your own financial advisor if you know how to read a financial statement and punch in the numbers in the right spot. So I recently completed marketing management at Fanshawe College, but I also have an economics degree at the University of Waterloo. Some of the financial designations I had while I was in the industry are the CSE, the CPH, the WME, and the LLQP. So I'd say I'm more than qualified to teach you how to do this. So what's the problem investors are having? So really, how does InvestAUS help you? Firstly, with investment fees. Financial advisors cost a lot for literally the amount of work they do. You know, it's really hard to get your business, but once they have it, they're just going to charge you trailing commissions. And these fees just add up to hundreds of thousands of dollars. So if I just give you a template, very similar to what a financial advisor is using, you're just skipping the middleman and keeping all those fees in your pocket. Money that would normally be going to fees and paying for the financial advice is now going to be compounding and still in your account. The next problem I find is investment education. Now, Australians, you're lucky. There's actually no one I dislike. Canada is a completely other market. Basically, the only reason why I'm on YouTube right now is there's not a Canadian finfluencer that I like or trust. You know, everyone does have their own opinion about money. Basically, there is no real right answer. No one can predict the future, but basically using models is what financial analysts have been doing for decades. Some models I believe in, some I don't. One of the main reasons why I never went to do my CFA is I don't believe in predicting the future. You know, analysts are predicting how much money a company is going to make in the future. How do you know? Like, you're not there. And one of the trickiest things we have now as well is investment selection. There's over 350 ETFs. Honestly, how is the average person going to go through all of these and compare them and build a portfolio? It's tough. When InvestAUS is building you a 10-fund portfolio just on the home screen, it's going through 5 trillion combinations to make sure you're in the best portfolio. This 10-fund mix is based on 10 different asset classes and a framework that can basically be used all around the world. The only country I've found so far that doesn't really fit into this algorithm perfectly is India. So what's the solution? A financial advisor in your pocket, basically always calculating the best risk-adjusted return for you to follow. And this still allows customization. Staying within 5% of these targets will make sure your portfolio will be less volatile, but let's say you like the NASDAQ instead of the S&P 500, go ahead, do it. But just know that your portfolio is a little more tech heavy than the average investor maybe should be. The foundation of this app is a target date fund. Basically, you should be reducing the risk of your portfolio as time goes on. They do have asset allocation ETFs, but really they jump down 10 to 20% risk tolerance. You know, really this is a smoother ride, just slowly adding more bonds into your portfolio. The idea here is to save money on fees. You don't have to pay a financial advisor anymore. The app also allows you to save time on research. The ETF focus list is basically giving you approved ETFs that just seem to be better than the average, and better than the average means a better Sharpe ratio essentially. How to make the most amount of money with the least amount of risk. Basically, the portfolio with the least amount of volatility in downturns is just going to be easier to hold on to. And why the Sharpe ratio is basically the best number to look at over time is we never really know when you're putting in money or taking out money. I don't think there's going to be a single person on this planet that's going to invest the same amount of money every 2 weeks and then once they retire pull out the perfect withdrawal stream every 2 weeks. Like, it's just not going to happen. It's better to be dynamic. That's what real life is. And essentially, if your investments are doing better, it's going to tell you to pull more money out. If we're going through a .com or an '08 crash, you're going to pull out less money, and it's probably going to tell you to buy more bonds in those years as well. The algorithm is based on tactical asset allocation. It's going to ebb and flow with the market just to make sure you're not taking too much risk when you don't have to. You know, if bonds are somehow paying 10% in the future and you're only 20 years old, the algorithm's going to shift you to maybe some bonds, even at such a low age. There's no point taking risk on your money with stocks if bonds are making so much money. If you take out all the ticker symbols and the percentages and the dollar signs, basically all I'm trying to help you do is put the square in the square hole, put the circle in the circle hole. But again, you can customize it. You don't have to follow it exactly, but follow it as close as you want. Try to stay within 5% of the guardrails. So when it comes to the main difference between InvestAUS and every other product, this is a builder and others are trackers. InvestAUS is going to be displaying actions that you should take, recommending adjustments to your portfolio. You can rebalance your account once a year, every time you put money in, every time you take money out, whatever the reason, basically just try to take a look at your money once a year. These portfolios are designed though so you don't have to touch them. The ultimate couch potato portfolio. Clicking buy in a brokerage account 10 times can put thousands of dollars of what would have went to fees into your account. Trackers just display results. All they're doing is tracking performance. When you link these apps to your brokerage account, basically you're just getting more details. They're giving you information that your current brokerage could give you, but they don't because they don't want to confuse you and you're just overwhelmed with data. No one needs to know how many dividends they get per minute. Basically, I'm trying to give you more advice, not more details. If these apps help you set an asset allocation on your own, great. You might be following an asset allocation and rebalancing your account, but if your original asset allocation sucks, you're just rebalancing nothing. So what's the app's competitive advantage? Basically, the prototype's on the App Store right now and currently free. Test it out all you want. It will save your data. Search up anything you want in the financial education section. A lot of these definitions are taken right out of the Canadian stockbroker textbook. The secret sauce of the app is really, though, the tactical asset allocation. Using historical and present data, it's building you an asset allocation that is helping you ebb and flow throughout the current market. Another reason is price. Basically, this is the most affordable way to invest. All you need is a little bit of guidance, and hopefully having a screen telling you exactly what to do is going to give you that confirmation bias when you click buy. You're also going to get that confirmation bias when you click sell in retirement. It's going to tell you exactly what investments to sell from. Another advantage is being unbiased. It's looking at every ETF mathematically. It doesn't care what provider made the ETF. It cares if it's making the most amount of money safely. And the algorithm's helping you control risk. You can precisely rebalance your portfolio as time horizons change and the markets change. If the app is telling you to make an adjustment and it's not that big and that adjustment triggers a tax that you don't like, don't do it. The whole idea is to give you easy and transparent advice that anyone can follow. It's giving you a ticker symbol, it's giving you a dollar amount, and you can buy to the nearest 1 share, 5 shares, 10 shares. It's again whatever you're comfortable with. Now on to the expansion of the app. A lot of these features are already coded. They're in other apps that are also live. Some are free, some aren't. But I've finally given in, and basically I'm going to try to put everything and have one app per country. Now the toughest thing is to make this still user-friendly with all these features. So I'm not sure how fast or how slow these are going to be built, but essentially I'm going to try to build a retirement calculator first within the app. I have to weave your tax system into the Retire MGN app, and this will give me the ability to give you all the information that you really need when it comes to paying your taxes in retirement. There's already a net worth calculator within the budget app. Now, I'm not actually a big fan of this tool myself, but people keep asking for it. Essentially, your net worth should grow over time. This is something that I will definitely make sure the app should track. But the richest day of your life should be the day you retire. Now we have to design a retirement income stream. We have to get down that mountain and pull from your accounts. If you have a $2 million house and a $200,000 retirement account, you're going to have to sell that house. Seeing a $2.2 million net worth isn't helping you. There is a free budget MGN calculator right now available all around the world, but essentially weaving it within the app to make sure everything's in one ecosystem is also something I'd like to do. And to really give you a holistic plan, you should have a life insurance calculator. How much term life insurance should you have? How much permanent life insurance should you have? The app isn't going to be able to sell you these products, but essentially it will give you a good recommendation of what someone trying to sell you these products should be recommending. There's a few more tools that users have also mentioned they'd like in the product. Something to help you with your cash flow, some kind of debt repayment calculator, maybe some financial quizzes to help test your knowledge. Some people want a focused list of stock picks, and I've also looked into weaving the Apple AI into the app. So here it is, InvestAUS. All it takes is one click to plan your money. Basically, the reason why I need your ages is the target date retirement. The bonds are in pink, and basically you can see as you get older, you're putting a little more and more bonds. And right here where it bends, that's your retirement date. Someone retiring at 65 and living to 90 is going to have a different portfolio than someone who's 60 and living till 90. The app truly is personalizing your portfolio. It's not putting you in these funds with billions of dollars and telling you you're getting personal service. So you want to put your current age into the app, when you want to retire, what your life expectancy is. When you're first using the app, you can basically say, hey, how much money you have? Put $100,000 here. But where the app really gets easy to use and organize now is the focus list on the bottom right here. So basically it's giving you the best of the ETFs to choose. You can buy all of these, and it is an emerging markets equity fund, but I just wanted to put the values on the same ones as the home screen so nothing got too confusing in this video. So we're going to say there's $100,000 in EMKT, a multi-factor emerging markets fund. We're going to put $100,000 in IVE. This is an EFI fund. These are your international companies. Australia is actually in this mix. Then we're going to look at global and US sector ETFs. We're going to use FANG. We're going to use IVV, the S&P 500 for American equities. VHY, another 100,000 for Australian high yield shares. VCF for international credit, CRED for investment grade corporate bonds, ILB for government inflation securities, PM Gold for gold bullion, and AAA for high interest cash. And it's going to save everything in here every time. And when you click back, it's going to port those numbers to the rebalancer in the front. And at this point, all you have to do is click InvestAUS. Now it shows an age that fit exactly a 60-40 portfolio. That seems to be the industry standard in North America. I'm not quite sure in Australia at this moment. I haven't talked to hundreds of people yet to really make a determination what the average portfolio is, but essentially I'm a 70-30 guy. I don't know if that's going to help anyone. A 70-30 portfolio is going to be really volatile at times in retirement, but it is something that has really pushed the limits and gotten the best returns over time. Now let me put an asterisk on that. It's only if you're sticking with one risk tolerance throughout your entire retirement. But I always suggest clicking InvestAUS. Just let the calculator do all the work for you. You're just going to have more peace of mind and sleep better at night doing it this way. So what the calculator is saying is, hey, you have $1 million, you're in a 60-40 portfolio, and basically you should sell some of your EMKT. You have too much emerging markets. You should buy some IVE for your EFI, top up your FANG a little bit, buy some S&P 500, and buy some Australian shares. You know, it's also saying sell some of your international funds, sell some of your corporate credit, sell a lot of your government bonds, and hey, you probably should have bought more gold the first time. Now, if you're more of a visual person, just click the rebalancer button. And it's going to take you to a chart that looks something like this, essentially showing you, hey, these are underweight and these are overweight. So you have to sell your overweights and buy your underweights. And by tapping the screen, it will kind of show you where those guardrails are. So basically, you need more American equities to have a less volatile portfolio. You should really make this change because you're out of the 5% guardrail. You know, foreign bonds are getting close here, so essentially you should say, hey, I'm going to sell some of my foreign bonds, maybe some Australian government bonds and some money market, and buy some S&P 500. Sell 3 things, buy 1, bam, you're done for the year. So if that 10-fund portfolio is maybe too much for you, just follow the 3-fund portfolio. It's using an Australian fund, a global fund, and an Australian bond fund. It only takes 3 products and you're going to get returns pretty close to that other portfolio. If you're looking for a portfolio that's a little more complicated than the basic 10, you can click around and find this portfolio. It starts to split up your international funds into Europe and Japan. And it also starts to split it up to the Nifty 50 and Asian tech. So if you have any questions, comment down below. Hopefully I'll be able to answer them. But essentially the app is free. I'd love to hear from you. Once you start clicking these buy buttons yourself, it's so gratifying. Just ignoring this problem and pushing it off is only going to cost you hundreds of thousands of dollars of fees. Let's put those fees back in your pocket so you can have a better retirement.